Well, a stellar jobs report in November, as we've been talking about, with non-farm payrolls surging by 266,000, unemployment falling to 3.5%. Let's dig deeper into that number and break it down by demographics. It's time for Yahoo U. Brian Cheung is here with this week's lesson.
Okay, well, class is in session. As we saw from this morning's jobs report, unemployment is at historic lows, actually 50-year lows to be exact. And as we've heard Federal Reserve Chairman Jerome Powell say before, keeping the economic expansion going means pulling more workers off the sidelines and into the labor market. So here's the actual unemployment number, which shows the unemployment down at 3.5%. Again, that is a 50-year low. This period that you're looking at is only for the last 11 years, covering the financial crisis, which is actually in that shaded part over there. What we call this trend of declining unemployment tells us that this is a tightening labor market. But when you actually unpack the BLS data, you can actually see some really fascinating demographic trends that this headline number at 3.5% won't show you. And one way that they can actually granularize this is by taking it and dividing it by education level. So this chart over here, the purple line is actually the aggregate number that I showed you in the chart before. But the blue line here actually shows you those that are unemployed among college graduates in the United States. And what we see is that's at 2%, extremely low. Makes sense because those who have that skill set coming from college are able to find a job easier. But what we want to focus on here is actually the orange line, which is above the aggregate number. This orange line actually represents those in the labor market that have less than a high school diploma. And at one point, actually only a year or two after the financial crisis, this number was once almost triple more than that of college grads. And what we've seen is that actually over time, it's narrowed. So those that have less than a high school diploma have actually caught up with the aggregate number in terms of being able to find more jobs in this tightening labor market, which means that this is a very good thing and a very good trend for those that are less educated in the labor market right now. And very interestingly, a similar story is playing out among minority groups. So let's keep in mind the purple line here in this case is actually the lowest one here, is actually the aggregate number. And the blue line represents those that are Black or African American in the US labor market, whereas the orange line represents those that are Hispanic or Latino. And these numbers show you that historically, Black and Hispanic workers in the United States have had a much more difficult time trying to find jobs in this market relative to the headline number. Now, unemployment actually improved for all of these groups, but what's most interesting is that specifically for Black or African American groups, which actually I'm now realizing is reversed. The orange line is actually Black workers, whereas the blue line is actually Hispanic workers. But the orange line represents how just dramatically the Black unemployment rate has come down over time relative to the aggregate number. You can see the gap in the years 2010, 2011, 2012, and just how narrow that gap has now gotten as the labor force has continued to tighten. But not as all perfect. So this is the labor force participation rate, and this is a measure of a different measure of the labor market. Whereas headline unemployment is a measure of how many in the labor force actually don't have a job. The labor force participation measure here is actually relative to all adult Americans, which would also include those that have given up on finding a job. And in the post-crisis recovery, this figure has actually slowly drifted down to a level of around 63%. For the past few years. So not necessarily a good thing that we can't get labor force participation up. But we also have a demographic breakdown of this as well. So in this case, we have the labor force participation rate at an aggregate represented by the purple line, whereas the blue line at the bottom actually represents African American workers, and the orange line represents the Hispanic members of the labor force. And these are actually the correct colors here. But what we have noticed is that the blue line, which shows you the Black and African American workers, it's actually been trending pretty closely to the overall aggregate labor force participation rate. So that as the labor market has tightened, there hasn't really been more workers being pulled into the labor market from that point in time. But interestingly, with the Hispanic and Latino members of the labor force, we've actually seen that it actually hasn't been too affected. We saw this drift down in the first few years after the crisis in the overall labor force participation rate, whereas at the same time, the Hispanic labor force participation rate didn't decrease by as much. It's a little difficult to see, but you can see that it actually did not fall in those first few years during the recovery as the overall aggregate did. So what does this tell us? This tells us that maybe there's a story in the Hispanic labor force that shows us there are maybe structural ways that you can get people back into the labor force that the aggregate and maybe African American workers have not experienced in the same way. And actually identifying what those factors are is a little bit of a more difficult task. But as we talk about this tightening labor market, yeah, yes, it's good for most workers, not necessarily all workers, maybe even better for some workers. But there are reasons behind that as well that don't have anything to do with one single point in time, like tax reform or like, for example, Fed policy. But all things worth mentioning as we continue to talk about this buzzy, hot labor market.
Thanks for the breakdown. Appreciate it, Brian.